Good afternoon, everyone. I hope you are doing well. समय से पहले और भाग्य से अधिक किसी को कुछ नहीं मिलता, पर जो समय के साथ स्वयं को बदल लेता है, वही भविष्य का नेतृत्व करता है. This quote attributed to the great Chanakya feels especially relevant today. The BFSI industry is being transformed by AI, automation, data, and rapidly evolving customer expectations. In this environment, success belongs not to those who resist change, but to those who learn, adapt faster than it. Good afternoon once again, everyone, and a very, very warm welcome to the second annual BFSI Learning Week presented by KNOLSKAPE. It's wonderful to see so many curious minds, from banking floors to insurance desks to capital markets and financial services teams, coming together for what promises to be one of the most thought-provoking weeks of the year. Last year, ladies and gentlemen, we laid the foundation. We asked ourselves, what does continuous learning mean for a sector as dynamic and consequential as ours? The response was overwhelming, and the energy has brought us here today, bigger, bolder, and more focused than ever. This year, we have chosen a theme that is no longer just a conversation for the future. It is the defining conversation of right now, artificial intelligence in BFSI. AI is not arriving in our industry. It is already here, reshaping credit underwriting, transforming fraud detection, personalizing customer journeys at scale, and quietly rewriting the rules of compliance and risk management. From chatbots handling millions of customer queries to algorithms making split-second trading decisions, the fingerprints of AI are on nearly every corner of our sector. But here's what makes the Learning Week so important. Technology is only as powerful as the people who understand it. The biggest risk we face isn't AI replacing us, ladies and gentlemen. It is AI outpacing us. And the antidote to that is precisely what we are doing this week: learning, questioning, and building our collective intelligence. Over the next 5 days, we'll hear from practitioners, innovators, leaders who are living this transformation daily. We'll unpack not just the what of AI, but the how and the why, and critically, the what next for each of us in our roles. So, whether you are here to understand the basics, sharpen your strategy, or challenge the status quo, there is something in this week for you. So, let's make the most of it. Ask the hard questions, challenge the assumptions, ladies and gentlemen, and leave here not just informed, but inspired. Once again, I welcome you to the second annual BFSI Learning Week presented by KNOLSKAPE. Let's begin. And to have a dhamakedar opening for the annual BFSI Learning Week, we have our opening keynote on AI in BFSI, from experimentation to enterprise scale. This session will explore what it really takes to operationalize AI at scale, combining innovation with governance, strong data foundations, and platforms designed to deploy AI safely, responsibly, and effectively. And to conduct our first session, it is my absolute pleasure, ladies and gentlemen, to introduce Mr. Parag Shah, a distinguished banking and financial services leader with close to 3 decades of experience in the BFSI sector. Parag has held senior leadership positions at institutions such as the ICICI Bank, where he spent 17 years, IDFC Bank as a founding member and senior director, and Fullerton Home Finance as the chief risk officer. Having led business, risk, credit, product, and policy functions across multiple banking segments, Parag brings a unique and a holistic perspective on the industry. Today, he serves as board member, strategic advisor, leadership coach, and mentor to fintech startups through the SPGen Accelerator Fund. Please join me in welcoming Parag Shah. Big round of applause for Parag. Parag, over to you.
Thank you. Thank you for those kind, gracious words, Kunal. The danger with such a good introduction is that the audience expectations go up multifold, and my challenge is now to make sure that for the next 60 minutes, I'm at least half as good as the introduction. Kunal, in banking, we're actually trained to verify everything before accepting. So I'm still conducting a due diligence of some of the claims that you've put for me. But thank you so much for those kind words. So good afternoon, people. What a joy to be here, and thank you all for coming here. I was given the option of delivering this keynote with no slides at all, just me speaking and the audience looking at my face for the next 1 hour or so. Now, considering the attention spans in a digital world, I wasn't really convinced that that was a fair deal for the audience. And so while this session is really about a conversation and not about a PowerPoint, I have introduced just a few slides along the way, not to overwhelm you with information, but simply to make the journey a little more engaging and maybe a little less monotonous. And if at any point in time the slides are not that interesting, hopefully the topic will be. So let me humor you a little bit before we actually start. You see the cavemen and what they were discussing, that they need to actually start earning money because now somebody's invented money. So seriously, the good news is that AI isn't really coming for your job. But the bad news is somebody using AI very effectively might actually come for your job. Every major technology wave that came and that we've seen creates two groups of people. The first one is the who say that, oh, you know what, this changes everything. And the second one who says, well, you know what, this is just a fad. History has not been kind to either of them because the truth actually lies somewhere in between. So in banking, we've survived, things like ATMs, we've survived internet banking, mobile banking, UPI. Interestingly, none of them eliminated jobs, but all of them eliminated certain ways of working. And the truth is, AI is going to do the same. So once again, good morning, guys. I can't see the audience. I can see your names, and I'm told by KNOLSKAPE that I'm looking out at some of the most thoughtful, most experienced leaders in Indian banking, NBFCs, fintech, financial services, private equity, investment banking, insurance, and whatnot. And also some young professionals and postgrad students all gathered in one place. And I'm trying to include something for each one of you. It's a task. It's a tough ask from an old man like me, but I'm still going to try. So firstly, thank you for being here, and thank you, Kavita and Kunal and KNOLSKAPE for having invited me. Today, I want to talk to you something I believe is the defining strategic inflection point for our industry. Not AI as a concept, not AI as a technology conversation either, but in fact, AI as an enterprise imperative. Over the next 60, now 55 minutes, I'm going to take you on a journey where we've been to, where we'll stand together, and most importantly, understand what it takes to move forward with what we have set out to discuss. So four big questions that we have for today, as you see on the slide, is that one is, why is AI and BFSI entering a completely new phase? And I'm going to step back a little, give you a slight context of where we are, where Bharat is, and then move to a moot question of, do we have a return on investment or a ROI on such AI investments that we are actually doing? The second one is, why are people stuck in the experimentation mode, at least for people who are stuck? And the third one is, what does it genuinely take to operationalize AI at enterprise stake? And fourthly, I also think that it's important that an AI native institution in 2030, what is it going to look like? If I have a crystal gaze, what am I going to kind of see? And finally, we'll end with 6 career multipliers in the AI era. I'm hoping that we'll find the time for something like that. We'll start with 3 uncomfortable questions, and I call them uncomfortable because they should be. Let's pause and read those uncomfortable questions. And as you're reading those 3 questions, I suspect most of you were not thinking about AI or artificial intelligence. You were thinking about customers, you were thinking about risk, you were thinking about trust, you were thinking about accountability, that who's actually responsible for achieving these three. So when we speak of a customer, one thought is shifting from what can AI do to how should intelligence be embedded into the operating fabric, if I may so say, of the financial institutions. And what this means is that the industry has moved from being just impressed by AI demos to, that's completely passé. The real question now is, where exactly does AI sit in your processes, your workflows, your decision chains, and how does it make your company and institution smarter, faster, safer? Say, for example, 3 years ago, a BFSI CXO's question was, show me what can AI do? And today the question is very different. What does your AI sitting on your computer or sit in my customer onboarding journey? And how does it reduce my turnaround times, improve my cost of acquisition? Does it reduce my drop-off rate? Does it reduce my KYC rejections? Specific use cases for every department, because all of them need to survive AI, considering there's so many changed ways of working. Let's look at question number 2. Fraud, definitely, we all know, is becoming super fast, more coordinated, increasingly AI enabled. Fraud and compliance challenges are increasingly networked and systemic, and definitely not transactional. What does it mean? It means that fraud today doesn't show up in just one suspicious transaction. It kind of hides across a web of several accounts, entities, patterns, which are kind of spread over time. So you really can't catch a fraud by watching one transaction. You will actually have to see the entire network, and that can be super tricky for a human eye without AI. So let's take an example. Say a mule account network. Now, no single account will look alarming. Small credits, quick withdrawals, clean KYC. But when you look at 40 accounts, suddenly things start to make sense, because you're moving money in a coordinated pattern across maybe 2-3 cities, 2-3 banks, and the fraud then becomes visible. So a transactional lens would perhaps miss it, but a more systemic network catches it. Now, let's move to question 3. We're talking about institutions that are prioritizing governed AIs, that is explainable, auditable, and regulator ready. Today, a lot of the advisory that I'm doing with companies is around this, that is your AI explainable, auditable, and regulator ready? Because what it simply means is that when the regulator kind of asks you that, can you really explain what just happened and why was this flagged or why was this not flagged? You can't turn around and say, system ko pucho, this is what the system is. For example, your AML, say, flags a customer, the compliance officer needs to file a STR or a CTR, a suspicious transaction record or a cash transaction record. The regulator asks, why was this flagged? In fact, the regulator will actually ask, why was this not flagged? And if the answer is, as I said, that, I don't know, ask the model, that's not going to be acceptable to the regulator at all. So you will need extremely clear, traceable reasoning trail. What data, what rule, what was the threshold? And all of this is because in BFSI, technology by itself is never really the story. The story is always about confidence. And which confidence are we talking about? A confidence that a customer places in us. If you're from a reputable brand, you represent the customers. You know that you represent a brand, so you really can't mess up with that brand. Or it could be the confidence that the regulators expected from each one of us, and also the confidence with which we really make decisions that affect people's money, businesses, and futures. And that is now why we have these 3 uncomfortable questions that you're seeing on screen. We've seen for several years, the BFSI industry has been running pilots They've been running sandboxes, proof of concepts, pilots. And sure, truth be spoken, I think many pilots I have personally seen were genuinely impressive. But something has actually shifted in the last couple of years, and particularly since 24-25 or 25-26. And now the conversation is no longer about whether AI can create impact. It's now about whether AI can operate responsibly, profitably, and at enterprise scale. What you see on screen is actually an IBM report which gives out the numbers on the screen that how are businesses moving core business functions into AI specific zones, or how optimistic are business leaders about AI transformation, and what's the business moat, right? Of course, this word is pretty new. The business moat just means a business competitive advantage with which they can actually beat competition. So in fact, in BFSI, unlike most software services company, AI is not just a technology conversation. It is a business model conversation, a governance conversation, a trust conversation, and maybe increasingly even a survival conversation. When we look at, I just thought, let's, for those people who are slightly uninitiated, let's just figure out how has AI actually evolved over time. So I thought, let's take a language analogy. And I want to share an analogy that all of us will kind of understand. So think back how we learn language as children. First, we learn the alphabets, then individual characters, no meaning, but just the foundation. Then after that, after the alphabets came the words, we started to combine, and then kind of meaning started to emerge through sentences. And then we could start communicating cause and effect, ye bola, ye hua. And then finally comprehension, we could understand context, read between the lines, and finally, as the slide says, judgment, reasoning, or creativity. AI in BFSI actually has gone through something remarkably similar. We began with something called automation, which was called business rule engine or rule engines about maybe 12, 15 years ago. In some big banks, even 20 years ago. Those were the alphabets of AI. So they were rule-based, deterministic, which means that if this is the policy, then this will happen. If that's the policy, this will happen. But it was not enough because it was fundamentally limited. Then came in analytics, which is in the last 10 years, which is nothing but words, where you are making sense of data, you are sorting data, you are making it structured, you're preparing dashboards, reports, patterns, and then came predictive AI, similar to the evolution of sentences, telling us not just what happened, but what might happen next, credit scores, churn prediction, bounce prediction, default predictors, or fraud likelihood and stuff like that. And then generative AI is what we see in the last 2-4 years, which is nothing but comprehension, understanding context, summarizing documents, generating responses, and so on and so forth. Conversational intelligence, through natural language processing, which is NLPs or LLMs kind of. So for example, for people who are not really initiated well into AI, in collections, many BFSI firms analyze customer conversations using NLP. I remember doing that in one of the banks that I worked with, where we used NLP to interpret tone, intent, stress signals, willingness to pay, repayment, and then we decided whether which customers need field visits, which customers will self-cure, which conversations will indicate a financial distress, and which will carry perhaps a fraud risk. The system is no longer just processing a language, it's interpreting behavior, if I may so call it. And now, since the last 1 year, we are at the frontier, which is agentic AI, reasoning and judgment. And they actually help you make decisions across complex workflows. And then going forward, we have something called AGI and ASI, which is artificial general intelligence and artificial super intelligence. If we have some time, we can kind of discuss a little bit about what an AGI or an ASI example is going to be. But of course, it's very, very new. It's still 5 years away. But it's important as BFSI that we should know what we are trying to get into. So the AI evolution in BFSI has actually mirrored, if I may call it as mirrored learning remarkably closely, where the industry is no longer experimenting with alphabets. It's actually trying to build enterprise level intelligence. And that requires, I would think, a completely different mindset. So having said that, let's just set one more context. What India is facing today is actually three simultaneous transitions. The first is AI capability transition, which is basically from systems that execute rules to systems that reason, predict, generate, and orchestrate. The second one is actually enterprise-ready transition, which is basically moving from isolated pilots to genuine enterprise integration. Again, with, as I mentioned earlier, with governance, accountability, and measurable outcomes. And we'll speak a little bit about how important are measurable outcomes. And the third is the most underappreciated, which is the leadership transition. Leaders are today being just, it's not just about being talking about AI. A few years ago to now, strategic accountability to AI outcomes is what is changed actually for leaders. So the first two actually get a lot of attention. Budgets are allocated, pilots are launched, but the leadership transition is where most organizations actually stall, because AI leadership, if I may so say, is no longer about understanding technology. वो सबको ही समझता है. Everybody understands. There are so many courses, everything is available. It's being actually accountable for what the technology is doing. Now, of course, all this is English. So let me just show you what 100 CEOs across industries. Now, this is, mind you, it's not for just BFSI. This is across industries. And maybe you can extrapolate the numbers that you see on the slides for BFSI as well, give or take a few percentages. So what does this look like in real world? The study says that there are 3 boxes, and I invite your attention to these 3 boxes. The first box that you're seeing as matured adopters, these guys really don't need to do too much. They just need to look at the key metrics. Definitely not how many AI models have we implemented, but just look at what are their key metrics. NPA kitna kam hua, rejection rate kitna kam hua, TAT kitna badha, ya kitna kam hua. This presentation largely is for people who are still exploring AI, or we call them as early adopters, running multiple pilots and experiments. And as I said, there is a small group of people who's moved beyond experiment, but still not yet there, and therefore exploring. The technology here is actually often similar. The difference lies, between a matured and an explorer. The difference lies in integration, governance, leadership ownership, and the ability to translate AI activity into measurable business outcomes, as I just said. And now the gap between these two groups, as we know, is not a technology gap. It's actually an execution gap, and that's what we're going to be talking about here in the next couple of minutes. So that's our 10,000 feet view that you are seeing over here. Let's actually look at just one case. There are 4 use cases that you see on your screen, but let's just talk about one, because I believe that while this is a keynote address and I don't really need to talk about a use case, given that I was, a large part of my life I've spent in operating roles, I feel that my address is not complete till the time I really pick up a use case. So if I just look at what you see on your screen, which is the red mark, which is credit and lending. So what can AI agents actually do when we're talking about credit and lending? They can actually pull borrower data through the Indian account aggregator system, which is Sehmati. They collect and consolidate data from multiple sources: bank statements, GST returns, income tax, bureau, could be financial statements, MCA filings, existing internal relationship data, could be even rating agency. And then importantly, what they do is also perform a data consistency check, which means the agents can actually compare GST turnover, bank credits, ITR incomes with the declared incomes, financial statements versus the GST filings, cash flow patterns, and that you compare with the repayment obligations. The one agent helps you prepare a first draft credit note and underwriting summaries. Of course, retail becomes slightly more easy. Wholesale banking or corporate banking for now was thought that it's going to take 8-10 hours, and AI agents make it possible to do it in less than an hour. They can also extract information from PDF, scanned documents. It can tell you that this scanned document seems fraud, and it could actually through the image models, they can actually look at factory pictures, warehouse pictures, stock taking pictures, and if it's a retail loan, then Kirana stores or something like that with multimodal AI. So info on their channels or distributors, vendors, all also becomes very, very possible with agents. Agents then go one step further and they highlight anomalies the way humans would earlier do before agentic AI came in. They tell you what are the missing documents, what are some of the potential fraud indicators, and then they also generate a recommendation and maybe some risk observations for the human underwriters. So we are also seeing AI being actually used for covenant monitoring, early warning signals. We used to have manual asset quality reports. So doing asset quality reports, helping institutions identify stress before it actually becomes a delinquency problem. So here the credit officer actually is responsible for the decision, and AI is not replacing judgment. So it is dramatically reducing the time spent on gathering, summarizing, analyzing, and ability to also discard information which is useless. So what's interesting is that these use cases that you see on the slide actually cut across various value chains across BFSI. Customer, risk, revenue, operations, marketing, finance, which is why AI or agentic AI is specifically no longer viewed as only a technology initiative. It increasingly becoming a business transformation agenda. Now, this one is, if I'm exploring, if I'm talking to a group which is exploring or somebody who's in the early adopters, I actually picked up a part of this slide from the NVIDIA CEO's presentation, which was Jensen Huang's framework. And I thought it was incredibly useful. I personally connected with it really well. Now, if you look at something like this, you will see there are 6 levels over here. 6 levels starting with you have energy, you have chips, then you have infrastructure, you have training data, you have AI models, and finally you have applications. Now, here's the important point for BFSI leaders. So if you're running a bank, you're running a NBFC, insurance company, wealth platform, fintech, whatever, your obviously job is not to win the race of chips or energy or to build the next foundation model. It's not even to become the biggest cloud infrastructure company. It's just that the data layer here, don't confuse it with the data that we are talking about, which is used for AI, but this is the training data that is used. So this is very different. So typically leaders should focus on BFSI on the layer, which is called application, which is what is put in yellow over there, and just look at the application layer. I'm not saying that the other 5 layers are not important, but the winning move is not to become experts in these 5 layers. Understand all the 5 layers because that's the foundation, but then focus relentlessly on just one, which is the application layer. And that's where AI is actually touching onboarding, fraud detection, which is the other half of the slide that you see. Focus on that application layer, and having invested so much in any layer, especially the application layer, I would typically ask, yaar, itna paisa hum log ne dala hai, where is the ROI? And that's a logical question. And therefore, I'm moving to that logical question. Most people will ask and have this question that if ROI from AI is still unclear, why is this adoption accelerating so much? I know this is a slightly provocative question and people don't like to discuss negatives, but yeah, topic aisa hai, I don't want to be diplomatic in a learning week session. So historically, transformative technologies, rarely actually began with, something which is perfectly measurable, be it internet, mobile banking, UPI, cloud computing. किसी का भी example ले लो. I don't think anyone had actually a measurable ROI. Frankly, the institution actually moved primarily because the cost of missing the shift became greater than the cost of participating. And of course, over time, it made sense. Whether it was internet, mobile, you're seeing the ROI getting built over time in terms of call it convenience, call it ease, speed, processing, customer acquisition, productivity, all of this, because all of this actually translates into revenues, cost reduction, and maximizing profits. And of course, how can I forget? Bettering compliance. So in simple language, what are we saying on this slide? The first one, we are saying we can't afford to fall behind. And nobody says this aloud. So even if the ROI is not really crystal clear, nobody wants competitors to become faster, smarter, more efficient using AI when they are standing still. So that's what the first one is, competitive pressure. The second one is, I think in my mind, super important. Customers have changed the rules. They no longer want you to behave like other banks. We're not comparing A bank with B bank, A NBFC with B NBFC. भाई इसका UI UX देखो, Amazon देखो, अपना iPhone देखो, look at any Android device, Netflix, Google, Swiggy, Uber, UPI, ease, convenience, smooth. I think that's what kind of determining what are customer expectations from a bank or an NBFC. So if you are investing now because your customers are expecting much, much more. And the third one, I've just given it a fancy term, guys. It's a very easy meaning. It just means that our current ways of operating may not actually survive. Many institutions realize that the legacy processes, legacy technology, and legacy operating models will become increasingly expensive and inefficient. So basically, we are investing because standing still becomes much more riskier than moving forward. And therefore, we're doing what we're doing. Now, to be fair, there are also institutions that are actually being and seeing some measurable returns, faster onboarding, lower servicing costs, better fraud detection, higher employee productivity, improved customer acquisition, retention. But even there, and I think this is actually the crux of the presentation. When I was kind of thinking what to say, I think the story is often bigger than a single ROI calculation, because the real value actually comes when AI moves beyond isolated use cases and starts improving how the institution operates at scale. Now, let me connect with that India context, which is moving from pilots and doing some things at large scale deployment. India has seen this, Bharat has seen this. People often ask that whether actually India is ready for AI at scale. I think my counter question to them is that which country has actually trained, and this is something we all have to be proud about. There's no political agenda, I promise you guys. Which country has actually trained hundreds of millions of people to transact digitally in less than 5 years? Of course, there was a distress in terms of COVID, which actually helped. But come on, I mean, we can't really, not give the credit to the ecosystem that helped it build. 5 years and now, there are millions, crores, multiple crores of people authenticating digitally, sharing data digitally. And I think before AI came, India quietly built the largest behavioral data set through the India Stack or the DPIs, which is basically your UPI, Aadhaar, your account aggregator or Samati, GST, DigiLocker, and all of that, which actually helps AI to run. So India is actually not just a market for AI and BFSI. India as a country actually has moved from being just a proof of concept to being a complete AI scale digital financial transformation. And hence the India banking sector is also shifting that we are seeing. I remember the excitement, and frankly, there was some nervousness as well last month when we saw Anthropic Cloud Mythos, the model demonstrations. Our government and various seniors in our government all started squirming in their seats. Many banking CEOs actually started to realize that the same technology that can help serve a customer can also be used by fraudsters to scale attacks. This resulted in our government lobbying with Anthropic and the US government. And thankfully now Anthropic has actually given India and some top companies, which is not publicly declared, at least till last week, and we need to find out as to who's going to use these mythos so that the fraudsters don't get the better of it. So banks now have one advantage. They can actually deploy AI at scale too. And in the coming years, the race is not going to be human versus machines. It's going to be, if I may so call it, AI versus AI. India is, of course, following the global playbook, but I think India is writing its own story as well. And I think let's move to in the interest of time, let's move to the next two slides. I think that's the crux of the presentation as well. So section number 2, which is why are people stuck in the experimentation mode? And what can people do to come out of that experimentation mode and do scale? I'm going to cover this together. Now, I'd invite you to look at the next two slides simultaneously, and I'm going to kind of navigate these two slides. So the first slide is actually going to tell you what the problems are, which is why we are feeling stuck. And the next one, which is this slide. So you have 1, 2, 3, 4, 5, 6, which are the 6 issues which are causing the problem. Sorry, 6 issues. 6 issues which are causing the problem, and then 6 issues which are actually answer to those 6 issues why we are feeling stuck. So let's look at the first one. We're talking about pilotitis, which is nothing but a term that I just created. Too many POCs, pilot after pilot. And don't get me wrong, not all, but some of them, there is not enough enterprise integration. So the gap between pilot and production is where AI actually loses its value. So some are pilots because the concerns are, yeah, this is such an expensive technology program. What if customers don't adopt it? 20-30 crore rupees kharcha kiya, and what if we don't get a measurable return? So these are legitimate concerns. I'm not saying that these are not. One needs to move beyond pilots, and it needs to be moving towards a phased integration. Nobody is saying move straight from a pilot into integration. It needs to be a phased integration, controlled investment. So if you look at 1 versus 1, you will find the answers over there. That if I have a controlled investment, measurable business outcomes, every pilot will actually then have a path to business value, ownership, and production deployment. So every POC can start with a clear path to integration, adoption, and business value. Pick up a pilot. See the KPI, if it meets the aspirational KPI set for it, and then adopt it. Otherwise, discard it and move on. We can't really get stuck. The second one is fragmented ownerships. Now, pardon me for saying this, but many organizations I've seen, AI sits in innovation labs, digital teams, or technology functions. Where's the business ownership? Who owns the outcome? Every AI initiative, uh, you need a business leader to actually be accountable for the revenue, cost, risk, or customer outcome being improved. So it's not just a technology team outcome, a technology team being accountable for such deployment. AI actually cannot remain a technology project. It needs to become a business initiative. And of course, you may need a few leaders to understand this. The third is actually data debt. And what do I mean by data debt? I think in my mind, this, at least in the companies that I've worked with as an advisor in the last 2 years, I think that's become super, super important. Fragmented data hai, inconsistent data hai, data is spread across many systems, unclear ownership. In many cases, institutions want to discuss models before fixing the data foundation. And that sequence, in my mind, rarely works. Under the India's DPDP framework, data quality is no longer just a technology issue. It's actually becoming a compliance issue. And the reality is very simple: data foundations first. AI quality actually cannot exceed data quality, garbage in, garbage out. So before the vendor, before the pilot, before the model, data actually comes first. The fourth one is actually governance deficit, and this is the AI governance deficit. So some institutions rushed into AI deployment even before building the guardrails, the governance frameworks. And here again, I think the sequence in some places was wrong. Governance cannot actually be an afterthought. Explainability, auditability, bias monitoring. Why is the system creating a bias in front of for certain people and not for certain people? But that bias monitoring. So areas like credit underwriting, collections fraud, or even ECL provisioning models. AI governance actually should get built in. And I repeat, explainability, auditability, and bias monitoring needs to be there from the beginning. You must be able to explain that if it's an AI-driven decision and it's affecting someone's life, someone's business or financial future, you bloody well explain it, why the decision was made. And the fifth one, again, is the work skill AI gap. Now, this is obviously very, very often misunderstood because it's not expertise everywhere. We're not talking about being agentic AI experts. We are only talking about AI fluency everywhere. Very, very different things. Now, let me explain. Every relationship manager, every risk officer, operations leader, or a customer service professional does not really need to build the expertise on AI. They just need to understand how to work alongside AI, which is what enterprise-wide AI fluency does. So what does it mean? Every employee will need to work alongside. They will not need to build it. And how do they do it? So some of the companies that I actually advise for business transformation formed a change management team who were dedicated members to transform the company. And some of them are handpicked from various businesses and to bring out the maximum impact. There's accountability and there's responsibility in carrying it forward. And the sixth one in my mind is wrong metrics. Now, I think wrong metrics becomes extremely important because a lot of people I see saying, you know what, we implemented 16 AI models last year. What do I do with it? 16 AI models. What do I do with it? Did it actually bring any change in the productivity things that you're seeing on your screen, right? I'll invite your attention to slot 6, quadrant 6. So basically, we're talking about lots of meetings, lots of dashboard, lots of pilots. Activity definitely is not transformation, guys. If I'm putting and installing AI applications and models without the right metrics and KPIs, it's going to be of absolutely no use. So transformation must be visible in business metrics. Boils down to revenue, profits, cost reduction, compliance. Simple. So this is actually, we're talking about why people get stuck and what should people do to get out of it. And therefore, I think it's now moving to what are some of the questions that every leader might actually need to answer. So if we have leaders in the room in the position of power belonging to the early adopters or the explorer segment, 3 questions. Do we have the right data foundations in place, or is our data still extremely scattered across different systems and silos? Second, do we have the guardrails, governance, and controls needed to satisfy regulators and have and able to maintain customers' trust? And third is, if AI is still seen as a technology initiative, do we have business leaders who are willing to actually own up and be accountable for the outcomes? As I move to the last 2 slides before I move to the skill sets that we spoke about. So what are we actually saying here? We are saying, as we move towards the closure of these 2 slides, let me just leave you with a thought that for most of today's discussion, we focused on the present, where AI is being used, where value is being created, and why many institutions still struggle to scale. But let's fast forward a few years. What might a AI native financial institution look like? So 29 and 2030. I don't believe that the bank of 2030 will just have maybe a little more AI tools than today's bank. I think that's a wrong way to look at it. The real shift is that AI will quietly become a part of everybody's function. So the first thing, we were only talking about hyper-personalized banking, but 2030 hyper-personalized banking will be real. So think about customer engagement. Today's institutions largely react to customers' request. Customer ne bola, हमने follow किया. The AI native institution will increasingly anticipate needs. They understand context and will respond in, I would say, real time. The customer won't feel like they are interacting with products or product pushers. They will not feel they're talking to agents. They will become your language by itself through maybe your dialect also. They feel like they are interacting with an institution that understands them. And I think that's the value that you bring to your customer. Second is the autonomous risk and compliance. Now, historically, risk management has always revolved around periodic reviews, post-mortem, reports and checkpoints. The future is far more dynamic. It means that risk, fraud, cyber threats, compliance obligations will actually get monitored real time, continuously and consistently, creating real-time visibility across the enterprise, not just in 1 or 2 areas, but across the enterprise. In many ways, risk management will move to 24/7. And the third one is, of course, we'll do better of what we are doing now, which is the agentic enterprise. Perhaps the most profound shift will happen inside the institution itself with this. We're already seeing early examples of agentic AI agents actually performing specialized tasks. And by 2030, we'll see thousands of such agents operating across lending, servicing, marketing, finance, HR, legal, training, collections, all of that. Here, of course, not replacing people, but working alongside them. So humans will continue to provide judgment. They will continue to provide accountability, oversight, while AI handles things like speed, scale, execution. And yes, some lending institutions have already began experimenting beyond agentic models. And the journey, I think, is just beginning. I think the fourth one is, again, very, very important, sovereign AI. Today, we are moving from a unipolar to a multipolar world. And it's important that AI becomes deeply embedded into financial services because it's a question of trust, control, security, and regulatory alignment, which is why I think sovereign AI is not just a technology discussion, it's actually a strategic discussion. So government is gearing big time with DPI, UPI, RBI Innovation Hub, NPCI, all the innovations they're doing, the India AI mission, if you guys have read about it, Sarvam, these things will become even more sophisticated. When I actually look at now the future, I don't see a story about technology at all. I see what the bank is going to look like in 2030, and I think AI becoming embedded into the institution, that's not going to be enough. Every major bank will have access to AI. So, it is a level playing field. The more important question is what will differentiate leaders from everybody else? And this is my view of what the AI first bank of 2030 will look like. What will differentiate the leaders from everyone else? I think the first one is proprietary intelligence. Now, what do I mean by this? This is basically human plus AI decision advantage. Institutions will compete on, had competed on products, on technology, branches, distribution. In the future, many of those advantages will become extremely easy for people to replicate. So what will be much harder to replicate is the institution's unique combination of data, customer relationships, institutional knowledge, AI capabilities, and human expertise. AI agents will only provide speed and scale. Humans will continue to provide judgment, accountability, and trust. The second one is that we'll, of course, have thousands of AI agents working, some helping customers, some optimizing pricing, collections, operations. Unlike humans, they don't work in shifts. They can work 24/7. They don't wait for reports. They operate continuously, creating a level of responsiveness that most organizations never actually experienced before. The third is decision making by itself will undergo a change, and many important decisions today are happening periodically. Weekly hota hai, monthly hota hai, quarterly hota hai, maybe daily hota hai. This will be an AI first institutions where AI or decisions rather through AI will become more dynamic, more continuous, more 24/7. Be it credit decisions, pricing decisions, customer engagement, collection strategies, whatever you call it. The fourth, I think, the bank will become increasingly invisible. Customers may not always visit a branch. Today they're visiting even 20%. I think that may not happen. They may visit an app, but that's about it. Financial services will increasingly get actually embedded in the customer's broader journey and delivered at the moment that they are actually needed. And finally, despite all the discussions around AI, I think the role of people is going to become extremely important, unlike what most people fear. AI will scale intelligence. Institutions will need humans to scale that judgment. AI automation will analyze, but institutions will need humans to provide context. Which brings me to the final question: where is banking heading? What are the skills that professionals, managers, and leaders need to remain relevant, valuable in the future? If I have to do that, more relevant for people who are young professionals in today's con call and people who are maybe students. So this is a framework that I kind of made, which means I reskill. And what does it really mean? It means that these are things which are not going to go out of fashion for the next 5 years at least. Beyond that, I don't have a crystal gaze. So the first one is relationship intelligence. We work in a business built on trust. Customers choose whom they trust. And therefore, the relationship skill will remain paramount, undisputed, and irreplaceable. The skill, I'm not sure if it's taught in a degree course or a university, but for me, I think it was homegrown by experience over time and consciously building skill over time. The second one is explainability and ethics, which is regulators, auditors, customers will increasingly ask, why was this decision made? And professionals who can answer that with confidence will be highly valued. If you're going to look at the machine, I don't think you're going to be valued that much. The next one is strategic judgment. I think you are aware that AI is too good at patterns. But as of now, it does not really fully understand context, ethics, culture, human emotions, and in our country, dialects, uh, state-wise customers, complexities. Every state of our country is actually a different country. So the ability to make sound judgments in a complex situation will kind of continue to separate the men from the boys, the wheat from the chaff, and the leaders from the followers. And that's an extremely human capability, the one that is worth investing if you're starting today. The K means the knowledge of data and business, which means invest in skill buildings rather than just degrees. Learn basic SQL, Power BI, Tableau on YouTube. There are some free channels. For example, I saw Alex the Analyst. Every month, take one report in your department, try and explain its business implications. And that's how you build expertise over time. I means intelligence and AI fluency. This is the new baseline, according to me. It's not just knowing that AI exists, but knowing how to work with it and how to give it the right prompts, how to check its outputs critically. The L here refers to learning agility, which is new technologies, new regulations. Now, how do you develop this learning agility? You follow three or four good voices on LinkedIn, search for AI Indian banking, or say, for example, look at India AI Mission website, RBI Innovation Hub, follow international experts on NVIDIA, Anthropic, OpenAI, Meta, Google, and you will exactly know what's actually hitting us soon. The last one is actually leading through change. And this one, I think, I feel very, very strongly about, because adapting yourself is one thing. And if you can't, and if your team actually doesn't follow, you haven't really led. The next generation of leaders in BFSI will not be defined by their own capability, but by their ability to bring people with them through uncertainty, through disruption, and through change. So as I conclude my presentation, I think I remember this, that every generation has a defining challenge. For some, it was industrialization. For some, it was globalization. For some, it was digitization. And I think for your generation, which is Gen Z, Gen Alpha, I think it is learning how to combine human capability with artificial intelligence, of course, in addition to climate change and geopolitics. But thank you, guys. I think I'm deeply grateful for your time and attention this afternoon. I would love to hear your thoughts, your questions, your pushbacks, your challenges. The floor is yours. Thank you all so much.
Thank you, Parag, for this fantastic sessions and setting the AI BFSI Learning Week on fire with the first session itself. I am aware of the time. Ladies and gentlemen, I have a request if it would be fine for us to continue for 5 to 10 minutes more. I also have a request. If you can drop in your questions in the Q&A box, I could see some of your hands being up and we can start taking a few questions. So, Parag, there are some really good questions which we have. And, let me start by asking this question from Venkita Krishnan. So Venkita Krishnan is asking that AI decision-making may be a biased approach or an enabler in reality because, every geography is different. Economics and business viability is different. So data veracity is a matter of question. So would that be a biased approach is what Venkita is
asking. So, as I mentioned, this explainability, auditability, that comes first. So once if you have your data foundations right, then, you make your guardrails. You can't have a situation where the AI decides for itself. Then you've lost the plot. We know that we have a country which is extremely diverse in a lot of things. And therefore, if we are actually able to frame rule and guardrails around what Venkatesh or Venkateshwara is actually saying, it's going to help you take it to the next level.
Sure. Thank you, Parag. The next question is from Rohan, and Rohan is asking, Parag, you called the future or as AI versus AI. Could you elaborate on that?
So the reason I'm calling it AI versus AI, because what we're going to see is actually agentic AI, AGI, and ASI. I think the future is going to be that, because we have reached a stage where a lot of people are saying that ASI or artificial super intelligence actually will beat humankind. And therefore, are we going to allow something like this? So today, when we are looking at BFSI right now, the distinction is not really about number of agents. The distinction is about type of intelligence. So if agentic AI today is, I'll take an example. Say it says agentic AI today says, help me buy a house. So agentic AI will actually break down into pieces that one agent will search for properties, one agent will compare loan options, one agent will schedule site visits. AGI, what they're going to do is it's going to be a one highly capable person. So you don't say find houses, check schools, calculate EMI, compare locations. You just say find me the best house for my family, and the intelligence itself understands. It will understand budget, schools, commute, safety, loan affordability, and all of that. We are now moving to that general intelligence. It's that general intelligence. So like a smart human, it can actually move from one domain to another without needing any kind of separate specialized systems. If you look at ASI, ASI is going to go one step forward. These are specialist employees. They're going to be the smartest executives in your companies. ASI is going to be an intelligence that may outperform the smartest executives. And the best of risk officers, the best of strategists, the best of data scientists, which is why ASI discussions can quickly become less about productivity and more about governance, which is why I'm saying with AGI and ASI, it's increasingly going to become AI versus AI. And humans will have to define it for them.
Thank you so much, Parag. Thank you. There are a couple of questions which have come from Sandeep Tiwari. And while I ask you Sandeep Tiwari's questions, ladies and gentlemen, there is a poll which is also open. So you can definitely give us feedback in the poll. Sandeep has a couple of questions. His first question is, who will be accountable when an AI-generated decision impacts a customer, a credit outcome, risk exposure, or regulatory compliance? And a follow-up question to that is, what AI capabilities should we build internally, and what should we buy from trusted ecosystem partners?
Wonderful. Thank you. Is that Rohan you said, Kunal?
That's Sandeep.
That's Sandeep, right. Sandeep, the first answer is, Sandeep, you yourself will be responsible. When I said that explainability and auditability, it means that while agents can do what they are, agents are built by humans. The data models are built by humans. We will feed it to them. So if we are going wrong, we are not able to explain the regulator that, dude, this is the reason. Say, for example, I'm not sure which field is this gentleman from, but I'm saying if Sandeep says that, say it is something about AML. Why was this customer classified as high risk or a low risk versus a high risk? It's the way you have defined your data foundations. If your data foundations are weak, then your data models are going to be weak, and therefore your applications are going to be weak, and therefore you will have a wrong classification of a customer. Instead of a high risk, will be classified as a low risk. So Sandeep, you yourself will actually have to explain it to the regulators. The second one was, you said, Kunal, what were the things that we have to be ready with? Is that what you asked?
When we buy, how do we trust the ecosystem? That was the question.
I'm not sure I understand. How do you trust the ecosystem? Does it mean working across vendors? I'm not sure. I don't really understand that question too well.
Sandeep, if you want to, add to it, please, we'd be happy to answer that if you could elaborate that. While we do that, I think we have time for taking a couple of more quick questions. The next question is from Kabir, and Kabir is asking, where does AI go beyond what we see today from agentic AI, and what next? And if you can give some BFSI examples of how it may shape up.
Yeah, so in fact, I just gave one, but I'll just quickly give a BFSI example. I gave the example of a house being searched. So let's take credit assessment. In agentic AI, one model will analyze bank statements, one will check bureau records, one will verify documents, one will assess fraud risk, and one might make the credit note. The pieces are connected, but each piece is specialized. Now, AGI, as I said, it's general intelligence. It just tells you, no, you ask AGI, should we lend 50 lakhs to this company? So the same intelligence actually understands financial statements, industry outlook, promoter behavior, macroeconomics, supply chain risk, fraud indicators, regulatory implications. No specialist systems are actually required. It behaves more like a senior credit team member than a collection of tools. And what is ASI? The easiest way to explain ASI, once again, is that they are specialist employees. They will be the smartest executives in your company. But of course, that's, as the NVIDIA CEO says, I will defer to his view, that we are still talking about 5-7 years ahead. Thank you, Kabir.
Yeah, coming back to Sandeep's second question, which was, what AI capabilities should we build internally and what should we buy from trusted ecosystem partners? That was his question.
Okay. So I would think that you will typically need partners, which is basically application layer. You decide if you want to go, depending on the role in which you are. Say you decide that compliance is something somebody is doing exceedingly well. You might as well defer to that person, that vendor, and take it from him. How do you take feedback? You, of course, ask around in the market. You don't have an agentic AI who's going to help you. You can't replace human judgment. So you will ask around to other CROs or business officers or whatever as to who are the guys who are doing some good job in this segment. But clearly, the first roles that you will have to do it yourself is being AI ready, keeping AI ready data. That's foundational. And the second is, I think, the business owned AI, which is that every initiative, whether you're going to take it from a technology partner, whether you're going to build it in-house, limited point is AI initiative needs to have a business P&L owner. Do not relegate it to a technology head or a CTO.
Thank you so much, Parag. Parag, thank you so much for the brilliant session. And thank you to our fantastic audience for this absolutely engaging Q&A. Ladies and gentlemen, stay tuned to the AI BFSI Learning Week presented by KNOLSKAPE this week. And thank you so much for attending the session. You have a wonderful week ahead. Thank you.
Thank you, and good luck for all your other sessions. Thank you, Kunal. Thank you. Bye-bye.
Thank you.